us here on the program. Again, it's a good afternoon to you. It's 2 minutes after 2. We will start our program by looking at some of the business news making headlines today.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
All right, welcome back. This is Nedbank Business Watch. Thank you for staying with us. And now for our business news.
Now, first story this week, the Ministry of Finance and the OPEC Fund for International Development signed a joint country partnership framework that is going to provide up to $250 million rather, equivalent to approximately 4.5 billion emalangeni in financing for the 2026-2029 period. The Minister for Finance, Honorable Neil Reichenberg, explains the key provisions as well as the significance of this particular agreement.
Since 2007, we've had a relationship with the OPEC Fund, and they've started off with just much smaller loans, but as the years go by, those loans have been increasing. And the reason why we like working with the OPEC Fund, and that is that because the cost of debt is very low. And so for that reason, they really are a great funder to work with. Really similar pricing to African Development Bank and the World Bank. And normally other funders are a bit higher, but their funding is really low. So we've now agreed to say over the next 3 years, we've got a $250 million framework agreement we have with the OPEC Fund, which is really lifting what you call the envelope for the country quite a bit. And it means that we'll then take more loans from OPEC and less loans from the more expensive funding, just bringing the cost of debt down is what we're trying to really do here in the long term. We've been very intentional as a country to work on this relationship with OPEC. There is definitely technical assistance. So before let us say you identify projects. Right now we're looking at the Mkondo Ngwavuma Phase 2 project. So we're now saying African Development Bank has been a great partner in the fundraise for that, but there's a lot of money needed for the Phase 2, and they're definitely going to be a strong funder of that. Before they apply their funding, they are very happy to give grant funding into feasibility studies and to make sure that the project is well designed, that the project is ready to deliver, that everything is in place. So by the time the real money comes, the loan comes, everyone knows that the loan will be very well spent. Again, as a country, if we say, can we please have technical assistance to help us to bolster governance in a certain area, they will help us with that. So the framework agreement also does speak to that.
The Minister for Finance, Honorable Neil Reichenberg, has said that although the country's economy is facing some strain, particularly due to challenges in the sugar industry and disruptions in other key sectors like mining, it continues to show resilience. The Minister said this while explaining the performance of the economy.
Economy currently is under strain. Let me start there, because as you know, our biggest industry is actually the sugar industry. And the sugar industry are having a few problems that's hit them recently. Number one, the sugar price, the global sugar price at some point was 35% down on the previous year. As you can imagine, now this is a US dollar price. It's got a big impact. Number two, the sugar industry is also, they sell their sugar mostly in US dollars or in foreign currency. And as we know, our currency has strengthened to foreign currencies. So that is another quite a big impact on them. Thirdly, the sugar industry is actually, which is now a very positive move, they are going through quite heavy capitalization programs, which means they're making energy or they're making more ethanol and alcohol, but which are it's very good because our sugar industry was very reliant on sugar, whereas around the world, sugar industries are often, it's quite heavily balanced between sugar, ethanol, alcohol, and then energy. They become plants that produce all three of these. So our sugar industry is now moving in that direction. going for all of these end products, not only having sugar, and that will make them robust, make them more profitable. So it's very good to go down the road, but while they're doing that, it sucks cash out the system. So before they were making really good profits. At the moment, the profits are looking quite low or non-existent even in that industry for now, while they're going through these some positive, some negative impacts. And so that impact will obviously have an impact on government. Secondly, our mining industry is mainly the anthracite mining industry, and the mining industry was mainly selling their anthracite into the smelting industry in South Africa, actually, and that smelting industry went through trouble. So for a year and a half, the industries were down, especially the chrome and silicon smelters. Even though South Africa has now made a plan where they've now reduced the energy price to the smelters, and the smelters are now starting up again, it had quite a negative impact on our mining industry. And so two of our bigger industries were quite heavily affected, and for that reason, that does have an impact on the country. But amazingly, through all this, our economy is still remaining quite robust. So we as you know, we come from a period, let's call it pre-COVID, of about 20 years of quite low growth, between 2 and 3%. Now it seems like the last 3 years, 2024, 2025, around 5% growth. And it looks like the numbers even coming through for 2026, again, remains at about 5% growth, even though we are taking a lot of strain in certain sectors of the industry. The fuel price had a big impact on Eswatini, and even the forest industry. They were leaving some products in the plantations because it just didn't pay to take it up because the transport had become so expensive. So now the fuel prices come down a bit. It seems to have also brought a bit more balance, but as we know, these are still elevated fuel prices that we are in the time. So even though we are going through these tough times as a country, somehow the economy is still performing quite well, showing robustness, also showing that hopefully then when we find recovery in these industries and in these problems, it means that hopefully we can get to a higher growth numbers. And so for that reason, yes, the economy is under strain, but the numbers are still showing that we are coping quite well under the strain, and that the economy is a lot more robust than what we thought it would suffer under the consequences of these negative impacts.
All right, and that's it for our business news. It's 9 minutes after 2 p.m.
The show returns after the break. Stay with us.
Attention retailers, importers, clearing agents and customs brokers. All television sets and decoders entering the Kingdom of Eswatini now require mandatory ESTVA authorization before customs clearance. No clearance without valid ESTVA import permit. Don't risk delays at the border. Submit your application 24 to 48 hours before your shipment arrives. We process complete applications in just 1 to 2 working days. Our QR-coded permits make the verification quick and easy. Always double-check your HS codes and quantities for smooth compliance. The process is simple. Step 1. Submit your completed application form. Annex A with product line items for TVs, decoders, and commercial invoice. Step 2. Eswatini TV reviews and approves. Step 3. Make payment and complete verification. Step 4. Receive your permit. Step 5. Clear customs smoothly at the border. Make sure you have all your required documents, a completed application form, Annex A detailing your product line items, commercial invoice, valid TV retailer license, and letter of authority if applicable. Our permits feature QR codes for easy border verification. For assistance, email us at license@eswatinitv.co.za or call our help desk. Apply before your shipment arrives. Ensure compliance and avoid delays. Remember, all TV sets and decoders entering the Kingdom of Eswatini must have a valid ESTVA import permit. Thank you. Act now.
Welcome back to the program. In our first business story today, we heard the Minister for Finance unpack the 2026-2029 country partnership framework known as the CPF with the government through the Ministry of Finance that has been signed with the OPEC Fund for International Development. We're now joined by our economist, Sanele Sbiya, who's going to help us really understand what this partnership means for the country and its economy. Sanele Sbiya, thank you so much for your time, for joining us. He joins us via our Zoom video link. What does this partnership really bring on the table for the Kingdom of Eswatini, and why is it important right now in Eswatini's economic transformation journey?
Thank you, Mr. Ngumalo. Good afternoon to you, and also good afternoon to our viewers at home. So what we're looking into right now, what I saw when I looked through the partnership framework, what I looked at is the fact that, we're seeing the OPEC fund coming with a transition from support in terms of budget support towards more catalytic investments in infrastructure that are going to create jobs. So now we're seeing a shift from the traditional funding model to that model. So when we look at it, when you browse through the framework, you realize that there is potential for the kingdom to go and get our support towards water and sanitation and irrigation. We're already seeing, the OPEC fund co-financing the Mkonvongwavu Dam down there. And we're also looking into potential energy investments, potential health investments, and expanded agriculture investments. So that's what the package entails for the kingdom. So I think at the high level, what I think is a bit different from the rest is the fact that the OPEC fund is going to support catalytic funding, into certain areas of government rather than budget support, which is what we call somewhat a good funding or good debt, but must still be within the sustainability levels. And we must make sure that you really just channel the money towards those initiatives for which you've borrowed for, so that you're able to deliver the project on time and also deliver the multiplier effect and the economic growth that is supposed to come from that, including the job numbers, so that you don't find yourself with accumulating debt stock. Because in whatever shape or form you look at it, it's still a fund, or it's still loans that the country is taking up. But we need the only difference is there are loans that are going towards productive or catalytic investments in the economy. So what we need to do with those is we need to make sure that they are delivered on time, and over and above, they are giving the benefits that they were foreseen for, so that they're able to at least pay for themselves or pay in part for the loans that we have taken up.
So this fund doesn't necessarily point toward one specific thing. Are you saying that it could point to the development of our infrastructure, on investment, on job creation, as well as the growth of our private sector?
Yes, Mr. Ngumalo. So in essence, when you're looking at the partnership framework there is water and irrigation. That's what we're seeing those loans for the Mkonvongwavu Dam are coming from. Water augmented projects. There is that loan that's going to be co-funded from there, and then also looking into energy potential, where the country could now invest further into your hydroelectric, or even invest in towards new energies, new ways of keeping the country powered up. There's also health, and then there's also agriculture. But what the core of the fund, Ngumalo, is we are not giving you the loans for budget support, but we want specific projects that we are funding with this loan, and you have to make a case why this project should be funded, and you should have a very good investment case on why those projects that you are picking should actually be funded. So if you're picking a road project, you must make an investment case for it. Why you are funding the road? How much jobs is it going to create? How much growth are you going to get out of it? And how are you actually looking at paying for that?
Yeah. So the framework says it runs from 2026 to 2029. That's a period of 3 years. And from the previous answer that you are giving us, you are pointing to the emphasis on this is not just more financing, but rather it wants to see tangible results. Are we speaking in terms of completion if we are to measure success in between this period of 3 years, or we can also just point to a bit of progress?
Ideally, Mr. Ngumalo, when you look at such frameworks at multilateral and bilateral level, what they really are looking into is to say, in the 4 years, we will sit down and recalibrate and see where the money needs to be channeled to. Right now, the key areas of focus are water and irrigation, energy, health, and agriculture. So you might find that 3 or 4 years down the line, we are seeing a shift towards ICT. So you kind of need to have a framework where you're going to have the Kingdom of Eswatini sitting down with the OPEC fund and crafting a way forward around the new emerging areas. But ideally, what you want to do is you would want to have seen a completion of all the projects that you would have already started within this 4-year period, so that you're able to close these current arrangements down when you move on into another one, say in 2020, in 2030. And I must say, Mr. Ngumalo, that this is not the first time the OPEC fund has funded Eswatini. We've always had such tacit arrangements running, year on year, 4-year on that whatever planning horizon that we have.
Yeah. So from the projects that we have currently ongoing, for you as Sanales B, as an economist, which projects would you want to see translate into meaningful economic implementation for whatever projects that are currently ongoing?
So for me, it's the Mkondo Gwagumvuma Water Augmentation Project there, because when you look at that, Mr. Ngumalo, I think you and I have spoken about this before, where we see the study that came out of that, and I think it was in part due to the fact that the OPEC fund needs for the country to make that business case. So there was a study that was done, and it actually showed that that project, if it can be implemented the way it ought to be implemented, it could create a lot of jobs for the kingdom. And the fact that it is within the agricultural space, it's one of those low-cost, industries that have very minimal barriers to entry, rather. So you'd want, for the kingdom to take advantage of that and make sure that we are continuing to support through that spectrum as a kingdom. And then also in energy, the country remains a net importer. So you'd want to see how we can, improve on the solar power projects that we have in the country. I mean, we have quite a number of them right now, which we are looking at implementing, and then also looking at, making sure that we have the health projects that are ongoing. But mostly for me, because our emerging problem is that of unemployment. If we can deliver the Mkondo Gwavuma project the way it's supposed to be delivered and create those jobs, I think would have done well as a country.
So deliver the Mkondo Gwavuma project in the space of 3 to 4 years, particularly with this financing, it should be done. That's your aspiration, at least, as well as a solar project. I want to get into a conversation that I heard being quite a heated one in Parliament, in the House of Assembly, which the question around borrowing and development finance. I mean, you've already enlightened us on what this particular funding is supposed to do. And so one wants to ask, how do we make sure that indeed the financing secured under this partnership strengthens economic growth and the productivity capacity, rather than adding to the country's debt position that currently exists, and one that is worrying, to be frank?
Yes, Mr. Ngumalo, that is the point that we have to contend with as a country. We do not need to, get taken into what you call semantics, because right now it's structured as development financing. But at the end of the day, this is a loan that you are taking up as a country. It doesn't mean now that we have this OPEC fund type of channel that means we should go and get that 4.6 billion that is most likely going to be given to us as a country. We have to think through and sort through and do a very strong analysis of whether we need the debt, what its impacts are going to be on the country's existing debt stock, and what impact are they going to have on GDP and the ability to repay the taxes, to repay the loans? Because remember, loans are paid by the taxes that we generate out of every project that we are making. So the distinction comes there in the sense that development financing comes specifically for a project, not for budget support as we were. But the tricky bit that I'm worried about, my worry here is the fact that until and unless government comes up with a consolidated loan account, where those funds are strictly going to go to the fund, to the projects that we are taking them for, instead of the money going into the common revenue pool, because once they go into the what's it called, consolidated account. Once it goes into that account, Mr. Numalo, it just becomes money in that account. It can pay salaries today and it can do other things. That is why you find that a lot of our projects get delayed, not because the money and the funding hasn't been secured, but the funding has been secured. Just to find that there's always those issues of cash flow, money not going through, not filtering through the way it ought to be because it goes through the consolidated account. So we do need to make that adjustment as a country so that we're able to deliver these projects timely. But let us not forget that this is a loan at the end of the day that we still have to pay. It still affects our our debt to GDP ratio, and it still affects our risk for debt overhang and for over exposure to that debt, which is a risk that this country is slowly and surely edging towards, not unless we focus on delivering these catalytic investment projects that are going to create the jobs, and you're going to get the GDP rising faster than the debt. The problem right now is the debt is rising faster than the contributions to GDP. So if you look at the rate at which we're accumulating debt and the annual growth in GDP, the debt outstrips that GDP. So that means you are accumulating, but your income position is not changing much as a country. So we need to look into that. And I think what we need also to set up is a set of rules against which the minister must now work with. I think we need to either set a ceiling. I know this one is a conversation that a lot of economists have had out there, but in our situation, I think we need to set up that limit, because it seems right now our debt appetite is insatiable. We know that there will be trying times where we need to go through a process in parliament to rework that limit, like it works in the US, where the Congress always has to set the limit, and they always have to every time go to ask for an extension to work above that limit. And I think that's what we need right now as a kingdom, so that we're able to keep our borrowing at bay.
Yeah, I mean, you mentioned earlier that this is not the first time that we are receiving this funding. If you reflect back, they say hindsight is 20/20. If we go back to that first one or the previous one, how did we perform with it? Did we do right? Were we able to implement and complete projects that were of urgent imperative at the time? And if not, I suppose that's going to speak to one of the biggest challenges that has existed, which is turning development finance into sustainable economic activity. And I suppose the bigger question will then be, what safeguards should we put in place, or implementation discipline, if you like, should we put in place to make sure that, you just alluded to what you've called a consolidated loan account. Perhaps that's one, but what are other safeguards that we do want to just really put in place to make sure that indeed we create productive jobs and ultimately expand the country's revenue base?
Thank you, Numalo. So yes, looking back and thinking through our borrowing and working with the OPEC fund, since 2007, we've received something close to $140 million in terms of those projects. But in terms of all our infrastructure projects, Mr. Numalo, we are yet to deliver an infrastructure project on time as the Kingdom of Eswatini. But yes, we are seeing, positive movements in other areas. But I think our project management and program management in itself requires a lot to be improved. So that's where we need to improve at first. You could even have the funds and they could still stay there because you lack that capacity. So we need to improve the project management aspect of government. And the way we could easily do that, Ngumalo, is through what I would say, implementing through us, through private companies, find a way to make a private-public partnership in the implementation, because that way what you are getting is the efficiency of private sector, diluting the bureaucracy of government, who in this case is government, who has the money to spend. But we know that there is a lot of bureaucracy within the government that needs to be upheld and to be improved upon. And we know that the project management skills and capabilities are vast in the private sector. So if you bring those and match those into the implementation modality, you'd be in a position to deliver the projects on time. And then also another safeguard is that specific loan account. For every loan we take and for every project, we should have a specific loan account. And we should also look into implementing through parastatals. I mean, if you look at the work that eWade has done down there in the LUSIP, from LUSIP to LUSIP 1 to LUSIP 2, and now onto the Mkonvo Ngwavuma augmentation project, they've done relatively well because they have this, what we call quasi-private type of operational modality. So I think that's what we need to shift towards as a country, to make sure that we allow the agility of private sector to work and dovetail with the bureaucratic processes of government, while you make sure that if you want now for the money to go through that, you need to also improve on the financial controls to make sure that you are able to control the money, so that you don't have to worry about people embezzling such funds. So I think that's what we need to do. We need to think as a country, how do we shift our modus operandi to benefit from the agility and leanness of private sector, while we allow government to also be at the helm. So you need to find a way of those partners to work together. And then also we need government, Parliament more especially, to be very strong and stringent when it comes to the oversight capacity. We need to make sure that before we go out there to get a loan, the minister must have, at least accounted for what the loans that he's taken in the previous years have done, and whether we still need this loan. And also ask ourselves if we can't find efficiencies within what we are doing, within the money that we have, so that we could we could be in a better position to fund a lot of these projects internally. But mostly, Mr. Ngumalo, it is ring-fencing the money and improving on the project execution and project management aspect.
All right, our time is up, Sanele, but I do want to ask you a simple yes or no answer. Do you think government is going to do exactly what you think is a good way of approaching this, which is the project management and taking the PPP approach in that regard? Yes or no? Will they do that or not?
No.
That's
No, they won't.
Let's be our economist. Thank you so much for your time. Our conversation was on the OPEC fund that the Kingdom has just signed on to. We'll go for a net break now. The show continues after the break. All right, welcome back to the program. The Eswatini Investment Promotion Authority has identified emerging products that could unlock new export opportunities for local businesses. So which products show the most promise? Where are the markets, and what will it take to get more Eswatini products across our borders? Tandega Dlamini, Manager for External Trade Promotion at IPA, joins us now to answer all those questions. Ngosi, thank you so much for joining us on the program. A very good afternoon to you. It's a very, very interesting development. I love the issue. It's issue number 3. Believe it or not, I've read issue number 1 and issue number 2, and I'm certainly excited to see what's inside this issue. Maybe let's start with the bigger issue. I see here your latest market insight identifies emerging products that could identify and diversify Eswatini's export base. Maybe the bigger question there is, what has changed in the market that has then prompted and made these particular products worth paying attention to now?
Thank you, Sfiso. A good afternoon to the viewers. So our market insights, in essence, an opportunity or a tool that identifies opportunities. They help us communicate to traders and those that are interested in the export business to say, this is where the opportunities are in terms of markets, in terms of products. This is where Eswatini is headed. So we use data to sort of analyze and interpret those statistics in order to give traders and businesses good information, or rather information on the opportunities. So now issue number 3 really was coming from a perspective of, you see, as a country, we usually say that our export, we are too concentrated. Our export basket is not diversified enough. Our markets to which we send our products are not diversified enough. So what this market insight seeks to then point out is that, yes, we have traditional products where we've maintained good export spells over some time, so sustainable export spells over time. But then, we are talking about your sugars here, your traditional products that in which the market is very stable and it's sustainable. These businesses have been here for a long time. Your sugar, your chemical, your wood, your textile, concentrate. So now, which other industries or which other products is Eswatini now gaining some momentum out there, where Emaswati can actually invest into, or even foreigners, they can come into the country and invest into? So we are looking at those products in this issue so that we give Emaswati that indication to say, these are the products in which you can enter, and these are the markets that are out there for these products, and this is the growth that we've experienced as Eswatini out there in the market. So the opportunity is definitely in there. So that's the indication we're trying to give everyone with this third issue of market insights.
When I reflect back to the first investment conference, I think part of the chief executive's presentation was the emphasis on the concentration. You call it a concentration spell? Is that the right? What did you say?
We are concentrated.
We are concentrated.
Yes.
Yeah, we have been concentrated for a very long time. And so I remember he made a few proposals there of what we could potentially look at as new pillars of exports. But maybe looking at this issue, what stands out for me is the preparations of cereals, flour, starch, or milk. And they recorded about 1 billion in exports in 2025, and an average annual growth rate of 23% between 2021 and 2025. What is driving that growth?
Investment. So when you look at, I would say, investment mainly, and then also, of course, the market demand out there. But in essence, you will notice that in the last 5 years, so the growth is really in the last 5 years. We were not exporting cereals before, like a long time ago. An industry came in to actually do cereals, noodles, and so forth. That was done through investment attraction by the country, So now, having had that industry, it has gone up, and it's appearing in our export basket.
Amazing.
And the demand out there in the last 5 years is quite impressive, as you are saying, over 20%. So it's really an emerging. So you can see the emergence of this product over the last 5 years. So really, imagine investing in industries which traditionally we never had exports in this industry, and then now it has gone all the way up. So it goes beyond the traditional products, and now let's look look at other products that can be produced in this country in terms of investment. So in essence, that's what has contributed to that growth. Yeah.
I wonder, how those meetings go when such suggestions are made, because I can imagine, in certain areas where we haven't really explored before, it's almost like a risk to say, let's invest in this. Is it going to be feasible? And so I really appreciate and admire the work that you guys have done, especially with this particular investment, looking at the tremendous numbers that we are now enjoying as the Kingdom of Eswatini, above 20%, and it's still going up.
Yes. And
it certainly tells us about where the next opportunities lie. But the other important issue here is the topic around value addition. I want you to speak to us about that one.
Yeah, when you look at, before I get to value addition, I just wanted to make a point where you see for that industry, it's here, the export growth is increasing. So think as a Maswati, what can I do in order to get into the value chain of that product? For instance, there are things that go into noodles. There's also packaging at the end.
Right.
So there are those value chains which you can take advantage of to say, if this product is increasing, then it must be packaged, remember, before it goes out there. Or rather, there are inputs that go into producing it before it's actually a finished product. So really, we are saying that these are the value chain opportunities now. I will make an example of another product, which is the tomato paste. We are seeing a lot of increasing as well. It's an emerging product as well, highlighted in these market insights. So when you look at that, if the tomato paste, it's already a packaged product at the end.
Right.
So really, what happens before that? There's backward linkages. There's tomatoes that must be actually produced in the country. So farming goes into it. So really, you see, so if the market is indicating that there's growth in the export market for this product, there are many other things that then are attached in terms of industries and value chain opportunities to actually explore and expand into.
So the biggest takeaway there is for the Liswati who is into business, they should really explore those other, like you are saying, those other chains to say, let me produce tomatoes, let me see if I can make the packaging for noodles or whatsoever else that is within that value chain. So I think it's important for our viewers at home to really take note on that and start exploring that as soon as possible. But here, when I read what is being written under value addition is that opportunities around fruit processing and preserves to the tomato paste that you're mentioning, animal feed, paper products, and even beverages, which is interesting. How important is the value chain in those other areas as well?
Very key. In fact, you're mentioning all these products that we're highlighting. Now, in these products, what's happening is that they are, if you notice, they are agro-processed. All that you've just mentioned, there's some processing that goes into it. So they are gaining momentum. They are gaining momentum in terms of quality, because you see with agro-processed products, you also have to talk to a lot of quality. So if our the demand out there for these products from Eswatini is growing, it must mean we are producing at that quality level. So really all that it is saying is that agro-process, look into agro-processing, and then look at the backward linkages in farming, and then see these products and look at the backward linkages and look at the packaging or the final product packaging element. So that's what the market insight is highlighting in essence. We're seeing a lot of growth to you mentioned animal feed and so forth. We're seeing a lot of growth if you look at the markets that we're highlighting here for these products, because we also give you where the demand is for Eswatini products. So when you look at it, you can see South Africa traditionally, yes, but we're seeing a lot of growth to Mozambique, which in the past we have not really explored much in terms of Mozambique. We just tended to really rely on South Africa. So we are seeing that we're trying to diversify. You are seeing other African countries as well, like your Zimbabwe's. So we are trying to diversify, although that's SADC, the Southern Africa, but we also are seeing international markets, especially the USA and also the UK. Those in these emerging products are becoming very important. So really, it's saying that the opportunities are there. Which markets are actually demanding these products from Eswatini? We are highlighting those. So in essence, that's what we're saying to the public, to say,
wow,
the markets are there, and these are the markets.
Yeah.
You know, you can explore in terms of diversification, entering into them, whatsoever. Just ensure that your product meets the right standards and everything, which means basically this is based on historic data of Eswatini. These are things that we're already exporting, and these are products that are growing in terms of export growth for us.
And I suppose that's a very critical question, and I'm happy that you've answered it before I've asked it. The question around who is actually buying, because it's one thing to encourage everybody to get into the business of things, but who are they going to sell to? And when you say the issue, does it only tell you what to produce, you know, where the latest trends are in terms of emerging products that the world wants, but also tells you the best possible place where that product can succeed in? I think that is a very brilliant thing. But perhaps the opportunity versus the capacity is something else that we want to talk about, because we can see significant growth potential, but also identifying that there's opportunity. That opportunity is one thing, rather. And I want you to ask you, producing consistently at the required quality, volume, and price is another. That's what the issue says. What are the biggest constraints when we look at what is necessarily preventing Eswatini's businesses from taking advantage of these export opportunities?
Okay, what we've noticed, you see, for instance, I will make an example of the sauce that is made from like your peppers, mainly as the main product. It's one of the emerging markets, emerging sauces, basically. What's happening is that you find that there are many players in that industry, but only a few have now reached a level of the enough production capacity and also standards adoption, so they are able to export out there. So, but there are a lot of players in it. So what we're saying is that these players, what's impeding them from entering export markets? It could grow even more than what we are seeing here, if those can be capacitated, if they can get access to finance to actually upgrade their production process and adopt the right standards. So they will be able to tap into the international market and take advantage of this export growth that we're experiencing.
But are we able to then source the solutions to these impediments? Because you did use the word. These are some of the constraints that are impeding them from making it out there. You mentioned production capacity, access to finance, and financing has always been a big one that has been a conversation at APA. I know you've always wanted a solution for that one, but also technology and logistics. Are there conversations to say, let's bring in the commercial banks to give these guys finance, but also in terms of production capacity, what are the conversations?
What we at Eswatini Investment Promotion, because as you are saying, there are many players in this entire trade stakeholders, so to speak, or trade support that is required. So at APA, on our side, we do export readiness trainings whereby we actually teach you how to start exporting as an Eswatini business. You see, for these businesses that I made mention of, we teach them how to start exporting, and we teach them the entire, from just identifying markets to the very end of actually starting to export. In between, there's customs, there's standards, there is trade finance, there is how to acquire that and where to acquire it, where to go to actually acquire it. There is an entire process. We have a guide actually on how to export, even on our website, to say to logistics. Where do you go for logistics? Other requirements like your SPS and so forth. To the very end of actually taking your product from here to the market out there, and of course we take you to trade shows to expose your product. So really the conversation around that is we need to support the businesses as we are trying from all the different areas in which we work, and in order for them to actually successfully enter and compete, because it's important. It's not just about entering, you must actually compete, because when you look at the traditional products like your sugar, and so they actually compete compete when they get out there. So
and that's why
that is very key. That's why they are thriving and they are maintaining those long sustainability spells.
Thandeka, thank you for your time. She comes from the Eswatini Investment Promotion Authority, and we have discussed issue number 3 of the Markets Insights publication. And the biggest takeaway from me is that they want to take you or the country from exporting commodities to higher value products, and they have every solution for that inherent in this Market Insights publication. Let's go for an ad break. We'll be back shortly.
Welcome back. This is our final segment, and we connect with Sanele Sibiya, in-house economist, for today's market analysis. Thank you for staying with us. A very good afternoon, and welcome back, Mr. Sibiya. There was a little relief, Sanele, on the energy front this Wednesday afternoon, as crude oil prices seem to have increased. How has that reacted? How has markets reacted to this? What's happening today in the global markets? Afternoon once again, Sanele. Thank you for joining us here on Business Watch. Welcome back. So today there was a bit of relief on the energy front as crude oil prices seem to have increased a bit. How has markets reacted to this? What other news are trending on the global markets today?
Thank you, Lungelele. Good afternoon to you. Good afternoon to the viewers once more. So what we're seeing, you're rightly on point, it's the pressure coming through from the breakdown in talks between the U.S. and Iran. We've seen quite a couple of heavy rhetoric coming from either side. First, we've had, Iran threatening to attack, U.S. installations in Europe. And we've seen the U.S., taking some drills in South Korea there. So now there has been speculations that the U.S. is somehow nudging South Korea to actually get in on the war. So now that has actually sent the price of oil, surging up in markets, and has actually just brought back the jitters in markets that we saw in the trading week. And then what we're also seeing as the market gears on for the release of the minutes today, later on in the day from that Fed meeting. So the markets are a bit cautious that we're seeing a heavy sell-off coming through from the AI stocks, with a bit of those traditional stocks gaining ground. So starting with the US, we're seeing the impact of all these confluence of factors that we have just talked about, weighing heavily on the Dow Jones Industrial Average, losing 116 points. The Nasdaq Composite Index has actually lost 355 points because of that tech sell-off there, and the S&P 500 is down 53 points in today's trade. So markets are eagerly waiting to see what is happening. Then I think one of the most striking things is the fact that when you look on the ground and look at them, as the sectors moving on the ground, it does show that this war is about to get back on full attack mode. And then we come into the European markets again. It's those oil sentiments, and Europe is just on edge again, given the fact that Iran is now threatening to take that war into Europe, and now that is actually just pulled down the FTSE 100 some 22.57 points.
below the 10,800 mark in terms of share volumes. At the DAX in Germany there, we've seen Frankfurt pulling down some 37.02 points in today's trade, but still sitting on the 26,000 mark, barely though, because we are now looking at 26,091.34 francs in terms of Deutschmarks in terms of oil overall share volumes there. And then the CAC 40 in France, we see in France really, just maintaining a bit of some strength. We expected that when this news came into the market, we expected France to start a downward descent back to those 8,300 mark, but we're still holding on at that 8,500 mark with those luxury stocks, continuing to support that market. And then also, when we move on to the Asian side of things, we're seeing the Nikkei in Asia. It's actually just taken a huge hammering there, losing 2,134.31 points in today's trade overall. So now that is driven by the fact that we know that 90% of the oil or energy consumption that comes through into the Asian market comes through the Persian Gulf region. And then also, when we're seeing this AI sell-off, it also affects the Nikkei because, most Asian companies, most Japanese companies are trading on those tech stocks. And when we're seeing that movement, that hammering coming through from that side, Japan does tend to react very rapidly to those. Hong Kong is somewhat showing signs of improvement, but you can see that it's still within subdued levels. It's not past the levels that we were at before this rhetoric started. So we're seeing the Hang Seng Composite Index up 23.92 points. And coming into the mainland there with the Shanghai Composite Index is down 95.88 points, and just lift back to that 3,800 territories, in terms of the overall share volume. Now, that is a confluence of factors we have. Firstly, it is issues to do with weaker data coming through in the mainland and also in Hong Kong, and then there's also the property bubble that we're looking at when we come into the Hong Kong market, into the Chinese market, and then there's also the AI sell-off and the energy shocks that are coming through again. Just really sending a blow through the Shanghai Stock Exchange there, where investors are waiting to see and just trying to map up a way forward with the level of hostility that seems to be moving, not just on the battlefield though, but when you look at what is happening on the ground, it does show to signs of, returning to serious fire on both sides. And then in terms of the South African Stock Exchange, we are barely up. So Johannesburg is barely up, but it is subdued at the 113,000 mark, though it shows some signs of a slight movement. So that's why we say we're seeing investors just trying to buy the dips there, but the sentiments remain in terms of the fragility that comes through from the Middle East. And when we're looking at it overall, you can see that we are still on the 113,465.60 rands, per share in terms of overall share volume on average. And then overall, we have seen a gain of 242.15. Now, this just largely to a small extent supported by corporate earnings, but the miners are still continuing to pull down the index there. And just remember, a few days ago, before we started seeing this rhetoric, we were at the 115,000 mark, and hoping that if our conditions had stayed the way we expected them to, we're going to get back to the 120,000 in terms of overall share volumes. In Eswatini, we've not seen any movement in reaction to what we are seeing happening in the global stock markets overall. And then in terms of the price of gold, our commodities, the gold and oil, we're seeing gold, slightly up 1.8 points, to sit at 4,422.40 cents per ounce. And then we're looking at the price of Brent crude sitting at $91.92 dollars per barrel. So now what we're seeing happening in terms of the price of gold, it is shifting largely due to the fact that we are seeing a return to the hostilities. So we do need somewhat of a safe haven asset. And while my markets are waiting for those minutes to come out, we're going to see gold, lighting up a bit until we see those minutes come out and we get to see in depth and in detail what happened in that first meeting. So when you look through the meetings, it's what's going to, the minutes, this is what is going to tell markets whether we should expect an interest rate hike to come through in the next meeting or so. And while we are in that point of uncertainty, gold continues to rise as speculation around what's going to happen in terms of the interest rates continues to abide in the market. And right now, because we've not yet seen any fire, going into Europe, and we've not seen South Korea coming into the war, and we've not seen any movements besides the rhetoric, the price of Brent crude oil is still at the $91.92 dollars per barrel, but it is above that 90 threshold that investors were looking into earlier on, and that is why we are seeing quite a lot of red throughout the market, because we passed that $90 per barrel threshold. And then in terms of the currencies, given the overall weakness of the US dollar, given the pressure that comes through from the bond market and through the bond yield, the Lilangeni is relatively strong against the dollar, even though we are at a point of 16.25 dollars dollars. 16.25 emalangeni per dollar. Now that is just slightly down from a level near the level of 16.26 earlier on in the trade. So we are seeing that relative weakness where the currencies are moving towards safer, developed world currencies. And then in terms of the euro, we're seeing the Lilangeni sliding back to the 18.86 mark. And against the Japanese yen, we're also seeing that weakness sliding to that 19.80 mark there, given this hostility. Whenever there's hostilities in the markets tend to move towards more stable currencies. We know countries in advanced economies which have quite a high ability to absorb such shocks. Thank you, Lunile. That's what we leave it for today.
All right, thank you, Mr. Spear, for that analysis. Sanile Sibiye, local in-house economist, giving us the global markets this afternoon. And there you have it, today's episode. If you've just joined us, worry not, you can still tune in on our YouTube page, Eswatini TV. Have a lovely day. We'll see you again next week, Wednesday, at exactly 2 p.m.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.
Anti-corruption agency today has said it's ordered an investigation into a number of senior officials in the Zelensky government. Well, let's talk about this story then with Philip Turl, our foreign affairs editor. First of all, let's talk about this demand by the former defence minister for an election. Is it likely that he'll get that?
It's very difficult to see how Ukraine could organise free and fair elections right now, as it's right in the middle of a war. Remember that the country is under martial law, and under martial law elections can't take place just because it's too difficult. To imagine that Russia's bombing polling stations, cities and towns where the vote is taking place, people won't be able to go and vote. They'll be too intimidated to turn out to go and cast their ballot. All of that is going to lead to those elections not being fair, which is of course something that the Russians would want, and undermine the legitimacy of the Ukrainian leadership. What we're seeing